we delivered on the guidance for the year, and we've been exceeding expectations. So globally, if you look at the underlying business, it continues to perform very strongly, particularly in renewables and in networks. And so that continues to grow year on year. We had the thermal charges, which is, I guess, part of the energy transition. As we continue to develop more renewables, the thermal assets also go on depreciating. And so we took a charge this year to take account for that. But I think really what has happened in terms of the energy prices is that we've had a massive volatility in the second half of last year. It's really introduced, well, we've had to be selling to customers at a predefined price, and in some cases having to buy from the market at much higher prices. So that was a short one-off hit, which we've marked to market at the end of last year. And going forward, we expect that to be incorporated.
Can I ask you about the outlook then? Because a lot of market watchers closely eyeing the situation on the border between Russia and Ukraine. To what extent have you lost some visibility, though, because of the uncertainty around that geopolitical situation and the impact on the wholesale energy market in Europe?
I mean, volatility, there's obviously a lot of volatility in the market. And so we've typically taken a relatively prudent approach and being hedged in most of our positions. The current gas prices are obviously pushing up the wholesale electricity prices, and that's obviously reflected across Europe. We've had a particular situation in Portugal and Iberia, which has been a very strong drought over the last couple of months. And that's been hitting, obviously, the performance because we've had less energy generation from hydro. That's being compensated to a certain extent by thermal and just by adjusting our hedging strategy. But anyway, volatility in general, particularly in our business, is not a great thing. So we've been managing through it. And going forward, I think we've seen sort of prices more or less stabilize at high levels. Let's see how things evolve from a geopolitical perspective and what impact that has then on the wholesale prices as well.
Miguel, good morning. The Ministry for Ecological Transition has designs on squeezing down the price to consumers. Do shareholders need to worry about government intervention into energy prices and you being caught in the middle?
Quite frankly, well, in Portugal, no. We've kept prices stable. There's no reason to have to increase that. There's no reason for any government intervention. I think the government themselves have been quite clear about that. We've seen in other European markets perhaps a greater incentive to interfere in the market and to have some more proactive measures. I think in general, the European Commission then came out with a toolbox which tried to frame the discussion so that the European governments didn't take very aggressive measures in the energy markets. So far, in most of the markets where we're in, Spain and Italy, France, and many of the other European markets, I think that impact has been limited. So to a certain extent, I think that's been controlled. Obviously, if this continues for much longer, well, then that regulatory risk in some markets might increase. Not in our core markets, which would be Portugal.
Can I ask you as well about the